Alright guys, so one thing I forgot to mention in our last video was the stop loss. So we would basically set our stop loss below the signal candle just to give us some room for any drawdown or anything like that. As you can see, the trade is actually working out in our favor. Any red candles or small body candles you see after the signal and confirmation, that's just chop. Our moving averages are still rising. We got in when the stochastic was in an oversold position. We set our first target, so we're good to go. We have to trust the analysis. As far as swing traders, that's our belief system that price is king, and that our technical catalysts tell us what to do, and they confirm our decisions and our bias. But with that being said, as far as stop loss, what I like to do is 10 to 25% of the ATR below the signal candle. In this case, this ATR on this stock, it's a penny stock. Penny stocks have really small ATRs, so I would probably just do like 50% or something like that. So it's a two-cent ATR. It looks like today. So I would just see the ATR looks like it's 2 cents or 20 cents, I guess. So maybe I would do like 10 cents. Or we could do this daily range, 46. So 10% of that would be, 4 cents. So I would do, in between 4 to 8 cents. So you would just go back to the intraday chart. See these trades moving in our favor big time. We would go the low on this candlestick is, if you can see on the top, it's 2.4. So we would just go, or 240. We would just go, we'll call it, like 236. So we would go to 236, set our stop loss here. I would trade this. See, our first target price is about to hit. So beautiful, beautiful. I'm glad this is happening in real time. So this would be our stop loss, just to protect us from any major drawdown. We're already in profit. So I would have set that stop loss as I got into this trade. We got into this trade 10 to 25% of the ATR above this candlestick. Normally it would have been a limit order if this was like a swing trade, but we would have got in here, and then I would have moved my stop loss above entry, maybe right here or above this candlestick, just so if I do get some major drawdown, I'd close out in some profit, or depending on how far I want to go up. Since my first target price of 303 was met, I would just have to make a trade management decision at that point. But it's up to your discretion. Those are just kind of some of my rules. We'll see if my second target price. I was talking about how markets are symmetrical, so I drew these shapes here and duplicated it and dragged it over here to get my second target price. As you can see, we're seeing some price sensitivity at this first target price because it was a previous pivot zone. So we'll see if the buyers step in. Look, we got a lot of volume here. See if it'll blow past this and move symmetrically up to my second target price. So yeah, I would basically put a stop limit order here, a sell stop limit up here, so that way I can the stop price would trigger the order to be filled, and the limit price would give me the best price. So that's it, man. If you have any questions or anything like that, feel free to reach out to us, learntostock.com to sign up. My name is Ryan, and I hope you got some value out of this.